if you want to confiscate gold which is held privately by the public, you actually need to send agents going door to door, which is very cumbersome. And in the United States, it's also very dangerous because the American public is probably the best armed public in the world. And so you're going to have many people trying to defend their wealth, and it's going to be absolutely bloody if someone ever tried to do such a thing.
Hello and welcome. Thanks for tuning in today. Many people are concerned about gold being confiscated because it happened in 1933. Could we face a confiscation situation in the future? And could digital assets be on the menu for potential confiscation this time around? Here to break this down for us today is the Silver Hermit. Oren, welcome back. It's great to have you on
Hello.
today.
Hello, good evening.
During the Great Depression, unemployment and homelessness raised to levels the U.S. had not seen before, and there was widespread loss of confidence in the banking system, which led people to start saving in gold. But the government referred to it as hoarding gold. On April 5th, 1933, Roosevelt signed Executive Order 6102. This meant that banks would no longer convert dollars to gold, and it prohibited ownership of more than 5 ounces of gold. All Americans were required to sell their gold to the Federal Reserve for $20.67 per ounce, and 2,665 metric tons of gold ended up being confiscated. Then, with the Gold Reserve Act of 1934, gold was revalued to $35 per ounce. This effectively devalued the dollar. Oren, what do you think about the potential for confiscation today?
Yeah, so today I'm going to make the case that another confiscation of gold and silver is absolutely unlikely. That we're living in a completely different world nowadays, and that I just don't see it happening. I'll start by just giving you some data, a few numbers that personally I find them mind-blowing. So the total market capitalization of US stocks, the US stock market nowadays, stands at roughly $63 trillion. The total market cap of US bonds, that's government and corporate together, is estimated to be about $50 trillion. That's a bit down due to rising rates, we need to point out.
Okay.
Uh, the market value of all real estate in the US, including residential, commercial, etc., is estimated to be $136 trillion. And I'll end the asset side of the equation by mentioning that the market cap of the Magnificent Seven, these are the largest tech stocks that we have nowadays, it's over $22 trillion.
Wow.
Yeah, of course, it fluctuates on a daily basis, but last time that I checked, it was around $22 trillion. So you can see that there are about a third of the market right now.
Yeah, that is a big chunk of the market.
Yes, it's incredible. It's as though the entire market is lopsided. It's pointed towards tech in such a way that it's imbalanced. So now I want to compare these numbers to the value of commodities that we have, because eventually, all our assets and all our income eventually is meant so that we can spend, so that we can consume, and eventually we are consuming commodities or stuff that is made out of commodities. So the global annual supply of crude oil is valued at less than $2 trillion. The global annual supply of corn is worth only $400 billion. The global annual supply of wheat is worth only $160 billion. The global annual mine supply of copper is worth $224 billion. I need to amend that number because just yesterday there was a huge decline in the price of copper. So now it's worth only $180 billion, more or less.
Wow,
And
that is brutal.
yes, that was
That's a
that
brutal
was
drop.
we've had a 20% decline just yesterday. And finally, the global mine supply of silver is worth only $32 billion.
That is a drop in the bucket. So the
Absolutely.
total market cap of the US stock market is 63 trillion and the global mine supply of silver is only worth $32 billion. That's a really interesting data point.
Yes, as you said, that's a drop in the bucket. And that means that theoretically, the value of the stock market, it can buy all the commodities in the world a few times over. For instance, just the market cap of the Magnificent Seven, it can buy you 11 years worth of global crude oil production.
That is crazy.
Yes, it's every drop of oil which is produced throughout the world, which needs to fuel everything, the entire economy, and they can buy just 11 years of it. And it goes on. They can buy 98 years worth of global copper supply. More, again, more because the price just dropped. So over 100 years worth of global copper mine supply can be bought with the value of those seven tech stocks.
That doesn't even make sense. That's
Yes, it
crazy.
doesn't because there's not enough copper to buy. And eventually,
Right.
the most mind-blowing piece of data is that the value of those Magnificent Seven can buy you 687 years worth of global silver supply.
What? The Mag 7 can buy the global silver supply for 687 years? That is really crazy. And I think it just goes to show not only how undervalued silver is, but how overvalued some of these stocks must be.
Now, you could wonder, is this a normal thing? Perhaps assets should be valued a lot more than commodities. Perhaps we should be able, our corporations, our bonds, our real estate should be able to buy all the commodities in the world many times over. But no, if you check the ratio between, for instance, the CRB commodity index and the S&P 500 index, well, you can see that it's almost at all-time lows, which means that we've had times in the past in which the ratio between the value of commodities and stocks was much higher, and you could buy a lot less of those commodities than you can do today. And I think it's just an anomaly. I think that this is a completely artificial condition, which is the result of continuous market manipulations and market interventions by policymakers such as the Federal Reserve and the federal government.
That makes sense because it seems to be in a really unhealthy imbalance right now.
Yes. So I want to say a few words about how we got here. I mean, like people who have been listening to us for a long time probably know that. But for those who don't know or are less familiar with the history of the past 20 years, we'll mention that it pretty much started with the 2008 financial crisis. Now, there was a huge crisis back then, and there was this feeling among policymakers that, that the economy is over, and unless they do something extreme, unless they do something drastic, then they're not going to have an economy anymore. Which, it's not true because the economy always finds a way to come back if you just let it be. But anyway, since interest rates were already at zero, short-term interest rates, the Federal Reserve embarked on its QE program. And what is QE? QE means that you print dollars and you buy long dated government bonds. And what that achieves is that it suppresses long term interest rates as well. So you already have short term interest rates at zero, and you start actively suppressing also the long-term interest rates. And this means that, interest rates are pretty much flat at zero. And that means that corporations can start borrowing money very cheaply because there's nothing else to do with the money. And theoretically, that was supposed to allow them, to develop new products, hire more workers, and restart the economy this way and generate some growth. But unfortunately, what many corporations have done with all that cheap credit, instead of using it productively, what they've done is they started buying back their own shares. And through this mechanism of share buyback, what it does, it reduces the amount of shares outstanding and it just, artificially pumps up their price because there's simply less of them out there. So this way, they artificially pumped the value of their own stocks, made themselves richer, made their shareholders richer. It wasn't very beneficial for the real economy, but it was great for the financial economy, and it created this bubble, which nowadays we call the everything bubble, and it still exists. And I don't know if policymakers were aware that this is going to be the result, but undoubtedly they liked that bubble. They liked the wealth effect, which it generated, this exuberance among the public. The stock market is going up. We're all going to be rich, feel good forever. And every time the stock market was in danger, you could see that they pumped more liquidity, more cheap credit into the system in order to keep it going.
Yes, keep it propped up. And as far as feeling good, you had mentioned the U.S. real estate market. It was number one on the list of assets that you went over. I know a lot of people believe the real estate market is inflated, and a lot of the folks who are sitting on real estate right now that they bought very cheaply and has doubled or tripled in price, they want to believe that it's going to hold all that value. Now, having said that, I mean, I could see real estate, of course, losing value, when everything pops, but I do feel like it'll still be number one on that list. I feel like those other assets that you were talking about will lose more value.
Yes, of course, stocks and bonds are more liquid. You can sell them very easily. And so they tend to crash a lot quicker than real estate. But even if we have like a lost decade in real estate and prices just move sideways for a few years while inflation is raging, that means that it doesn't crash in nominal terms, but it does crash in real terms. And that's one of the things you should look out for because it's kind of deceptive. You see the price not going anywhere. It feels nice. It feels as though the prices of real estate are stable, but in real terms, they are losing purchasing power.
Right. That's a really good point.
So, what I think is that the Fed was aiming at achieving what I call selective inflation. What is selective inflation?
Okay.
It means inflation which affects only asset prices and does not affect the prices of commodities and thereby does not affect the prices of consumer goods and the prices of your groceries, the supermarket. They remain stable while their money printing is propping up both the stock market and the bond market. And this is like maximum pleasure. You see your grocery bills staying pretty much the same while your stock portfolio is growing and you feel this wealth effect. You feel wealthier than you really are because it's artificial.
Right, but it feels good when it's happening.
Yeah, it feels good when it's happening. Now, I need to point out that after 2008, we did see the prices of commodities in decline because they were correcting due to the crisis. But still, I don't think that this was enough to explain why we've seen such low inflation data for so many years. I suspect that in the background, especially after 2011, The Federal Reserve was actively suppressing the prices of commodities, and especially the precious metals, gold and silver. I think they were doing both things. I think they were propping up the stock market, and I think they were suppressing the prices of commodities in order to achieve that good feeling, in order to achieve that selective inflation.
Right. And at least in regards to gold and silver, we know there has been price suppression. And it would seem very plausible that other commodities were targeted as well.
Now, I don't know if they targeted all the commodities. I've heard analysts argue that by targeting gold and silver, you can affect the entire commodity complex. And perhaps crude oil was manipulated as well, because this happens at a very high level. There's OPEC is involved, and the producers are involved. Perhaps the price of crude was managed as well, and we do know that the price of crude affects the prices of other commodities because the production of every commodity requires fuel.
Right. Absolutely.
So this is my theory. For a time, it felt good to have this selective inflation, but when you continue doing that for a long period of time, you get this imbalance, which I don't think that the Fed was aware of. I don't think they could foresee the situation that it will eventually lead to. In order to explain this situation, I have this metaphor. So I envision as though two aquariums. One of them
Okay.
represents the stock market, and the other represents commodities. And let's assume that you start pumping water into one of them, just one of them. And when it fills up, you just extend the glass walls, you make them higher, and you continue doing that again and again until you get this incredible, like, skyscraper of glass, which is the stock market, and it's entirely filled with water. And on the other side, you have this tiny aquarium, almost empty, which is the prices of commodities, of course. Now, as this skyscraper, as it grows higher and higher, you can imagine the weight of the water starting to crack the glass, and eventually, all that water that you've pumped into the stock market, it wants to get out. It wants to move to undervalued assets. And so I think that's exactly what we're seeing right now. I think we're seeing the first cracks in the stock and bond aquarium, which is filled up to the sky, and the water is starting to seep into the commodity aquarium. And what I'm fearful of is the moment in which the glass completely shatters and all that water that has been accumulated over more than a decade starts just gushing, rushing towards the commodity aquarium. And of course, it doesn't have enough space. There's not enough commodities at the current prices to accommodate all that liquidity coming from the stock market.
One of these companies could completely corner the silver market, for example, with this disbalance that we're seeing right now.
Yes. Now, of course, once you start this rotation from stocks to commodities, then the prices of stocks start falling and the prices of commodities start rising. So eventually it's going to come to some kind of balance. I mean, like, we don't need to produce hundreds of times of the entire global supply of silver in order to satisfy that demand. The price is going to rise and eventually there's going to be some kind of balance. But just the movement from one asset class to the other, it's going to generate such incredible inflation that it could just collapse the dollar on its own.
Right. And it almost reminds me of people saving or hoarding, as the government said, gold a long time ago when they had lost trust in the banking system. Once they lose faith in the stock market and they start moving into commodities because they would be seen as a safer place, yeah, it could get really out of control.
Yes, that's kind of a self-reinforcing movement because once the prices of commodities start rising, it's like a signal to traders, hey, commodities are starting to perform really well. So more and more people want to sell some of their stocks and some of their bonds and move them to commodities. And like once the movement starts, you can't stop it. What I'm concerned about is that the Federal Reserve may panic and it may take some drastic measures in order to stop that rotation. And what I'm thinking about is primarily about, I'm thinking about capital controls. And that's like the basic thing that they could do is say, okay, you're not supposed to buy commodities. We're not allowing you to buy commodities. They can put restrictions, for instance, on the commodity exchange and not allow regular retail investors or even corporations to buy futures contracts if they're not directly involved in that market. For instance, they could say, unless you're a consumer of copper, you're not allowed to deal in this market. For instance, but when you put restrictions on people, they tend to try to bypass those restrictions. And just imagine that a corporation wants to invest in copper and it's not allowed to do that through the commodity exchange. Then what
Okay.
it's going to do, it's just going to go to the nearest copper mine and just buy all its production 5 years into the future.
Right.
And
Just go get it
so
directly from the source.
yes, of course. Also, the Federal Reserve can restrict the movement of capital as far as American corporations and American citizens are concerned, but it has no control over foreign corporations or foreign governments.
Good point.
And so I don't think that capital controls are going to do the trick. I think if a rotation from stocks and bonds to commodities really picks up, I don't think even capital controls can really stop it. The prices of commodities are going to continue surging.
So what would you see, or what could you see a solution would be for a government who's trying to control a situation like this?
The only solution that I can think of, it's a very radical solution, but it's the only thing that will work, is confiscation. Absolute confiscation, or at least the freezing of those assets. Like if money is flowing out of stocks and bonds, they can say, okay, you're not allowed to sell stocks or bonds, or perhaps you're not even allowed to access your stock portfolio. I know it's an extreme measure, but in the environment of runaway inflation and the stock market is threatening to collapse, I can see the Federal Reserve enacting extreme measures. And I want to mention that the top 1% right now, the top 1% of earners hold nowadays over 50% of the stock market and over 38% of the bond market. That means that the wealth is concentrated in very few hands. Most people won't be affected by such measures. And so I don't think we're going to see huge protests in the streets. Because if very few people are affected, only the wealthiest people are affected, then we reach this situation in which the public actually supports this move to freeze the assets of the rich. And come to think of it, nowadays you have all those college kids, they get indoctrinated in campus by their professors, they adopt socialism, and now they're being told that we're going to freeze the assets of the rich. They may actually support such a move. They will
They would probably
gloat.
like it.
Yeah, they
Yeah,
will
that
gloat over the misfortune of the rich.
absolutely. They wouldn't mind at all. Yeah, you're right. I don't see any public outcry of any noticeable degree if something like this happened.
Yes. Now, we're talking about some of the wealthiest, most powerful people in the country. And they're going to use their influence to try and stop it, of course. But I think if this situation is extreme enough, then I can see it happening. Of course, this is the end of capitalism.
Right. But it would definitely be the end of The one percenters putting heavy amounts of money into the stock market and into digital assets.
Yes. Now, why do I think that the confiscation of digital assets is more likely than the confiscation of, for instance, physical gold and silver, physical assets? Well, both stocks and bonds nowadays, they are digital assets. They exist only as entries on some server somewhere. Most people don't even hold stock certificates anymore. So a government which is determined to do that, they can freeze those assets at the stroke of a key. It's very easy for the government to do that.
Absolutely. I mean, they could go and seize people's crypto wallets. They could shut down entire crypto exchanges if they wanted to.
Now, the cryptocurrency side of things is, I think it merits a discussion on its own because theoretically, these are supposed to be assets which are immune to confiscation, which are as though beyond the reach of the government. But we do
Right.
know that it's not truly the case.
Right. Well, this is what I would say in regards to cryptos being frozen. It's a legal measure that they engage in here in the US, and I'm pretty sure other governments do it as well. Um, and what they'll do is they'll prevent access to certain wallets for legal reasons. If they want to prevent entities from transferring specific cryptocurrency funds due to like suspected involvement in crimes, they can just shut it off. This way, the assets will be secured while the investigation is going on. They can shut down a whole exchange if they want to. You know, for example, what we saw happen with FTX. So it would be a little different if they were doing it for confiscation purposes, but at the flip of a switch, they could stop all the transactions from happening. And I'm not sure legally what would go down if they were looking to permanently confiscate assets. But as of right now, it's easy for them to freeze them for a duration of time if they
Yes,
wanted to do something like that.
yes. I don't know all the nitty-gritty about what you can or can't do regarding Bitcoin, but I do know that you can block the on and off ramps into the cryptocurrency world. I know it completely contradicts the push that we're seeing right now by the Trump administration to regulate and allow for stable coins. This is something they've been talking a lot about lately. But again, in the extreme situation of runaway inflation, I can imagine all sorts of extreme measures being done in order to try and stabilize the system because runaway inflation has a tendency to completely destabilize society. And therefore, I think all sorts of things which are unthinkable today can become viable options in that environment.
Sure. Before they confiscated the gold, I'm sure people never would have thought that that was, you know, something that they would consider doing or something that might be part of their reality, you know, in the coming years.
Okay, so let's talk about the possibility of a gold confiscation, as we
Okay.
say. Well, first of all, as a physical asset, if you want to confiscate gold, you physically need to go and get it. Of course, for a government, it's easier to go for the low-hanging fruit, which means the gold which is stored at bank vaults, and also nowadays, the gold which is held by ETFs.
Yes. It would make sense that they would go after the big stockpiles, you know, for the most bang for their buck.
Yes, and if you want to confiscate gold which is held privately by the public, you actually need to send agents going door to door, which is very cumbersome. And in the United States, it's also very dangerous because the American public is probably the best armed public in the world. And so you're going to have many people trying to defend their wealth and it's going to be absolutely bloody if someone ever tried to do such a thing. And also, we're not in 1933 in which many people held on to gold and silver because you know, that was the money back then. Back then, the US was on a gold standard. Nowadays, very few people hold physical gold and silver. And so I don't think it's going to be even worthwhile for the government to even try and physically confiscate them, go door to door and try to get them this way.
No, I think you're right. And I think another problem that they would have is, well, people would be trying to hide it, and then criminals could target the confiscation trucks. And that could be a real problem for them, especially if it was like a really well-armed group that maybe was being backed by a cartel or something that had slipped across the southern border. And they specifically were going to go try and knock over some of these trucks because, every once in a while, as surprising as it may sound, we'll have armored cars get attacked by criminals in the US, and the armored cars are no joke. I mean, you need a 50 caliber stronger to get through the armor on those vehicles, and people will still go after them. They'll follow them until they're in a compromised position, like someone's opened one of the doors, and that's when they'll attack. So that could be a big problem for them. It's something that a DMM or Dumb Money Media had brought up in the past was the idea that they would make it illegal to sell it to anyone but them and to have it, and that people would just kind of bring it in. And if they were to try it, I think they would probably go that route as opposed to trying to go around and collect it up. It would be a logistical nightmare, to do that. And
Yeah.
they would probably lose some along the way. And like you had mentioned, it would be dangerous. Something bad would happen at some point during that
Another point that
process.
I would like to raise is that the public back then in 1933 was a lot more cooperative. I think people
Yes.
were more patriotic. I think back then they trusted the government a lot more than they do today, and they were more likely to turn in their gold if they were asked to do that. I think that many people in 1933 kept their gold, but if back then you had some cooperation by the public, nowadays you won't have any cooperation by the public. And if the government asks you to turn in your gold and silver, I don't think anyone will do that.
No, I don't think so either. Um, Now, in regards to the large stockpiles, it probably is worth it to mention that leading up to 1934, before they did the silver confiscation, you might say, they were keeping a list of any individuals that they thought had more than 50,000 ounces of silver. So on top of those big vaults, the really big whales out there, the rich folks who have a lot of gold and silver, they might be on a list right now. I mean, that's possible. And so
Interesting.
yeah, so they might go buy a couple mansions that where they're like, hey, we think that there's 70,000 ounces of silver, or we're gonna get this guy and we're gonna figure out where he's vaulting this. Um, so you never know. So some of the really rich folks might get targeted by a situation like that. Now, I know some people are interested in the topic of silver confiscation, and some people might be concerned about what that scenario could look like. Now, why would they be concerned about this? Well, it kind of makes sense because it is a diminishing resource with a high demand. As they say, history does not repeat itself, but it rhymes. So, if we just take a quick look back at 1934 and what they did with silver, well, on August 9th of 1934, Roosevelt signed Executive Order 6184, which required silver within the continental United States, so not Hawaii or Alaska, to be turned in. Silver coins were not required to be turned in, so any form of silver coins. And there was also other silver that was being held for specific professional or artistic purposes. They did not need to turn that in. And the response to this back then was mixed. They say that some people complied and that other people hid their silver. And it was very hard for them to know who all had silver. Now, what's kind of interesting is when people turned their silver in, they were paid $1.29 per ounce, and the payment for the silver was made in the form of standard silver dollars, silver certificates, and any other coin or currency of the United States. So a lot of these people who turned their silver in were literally handed back silver in the form of U.S. coins. So that's kind of interesting. But there was a catch to that. There was a fee of 61.32% in the form of mint charges. So it really turned out to be more like 50 cents per ounce that they were getting compensated for this. So if they were
Interesting.
to, yeah, isn't that interesting?
Yeah. Now, I have a last point that I want to make regarding the differences between 1933 and today. The situation back then was completely different. Back then, they were dealing with a deflationary crisis. Of course, they
Yes.
were on a gold standard, and since they entered this huge recession, the Great Depression, so the prices of all commodities were falling. Okay, so in order to stop such a deflationary crisis, what you would like to do is to confiscate the gold so that you can devalue the currency and generate inflation.
Yes.
Now, why did they have to confiscate the gold before they devalued? Because if people had physical gold in hand and they would devalue the dollar compared to gold, they would not be affected. They would be protected from that
Yes.
devaluation. So it would have no effect on the economy because people would retain their purchasing power. What they wanted to do was to seize all the gold so that the government, the federal government, will be the only one to benefit from that devaluation because it has all the gold, and the gold, of course, retains its value while the paper dollars are devalued. But nowadays, we don't have a deflationary crisis. We don't have a deflationary problem. We have an inflationary problem, right?
Yes.
The value of the dollar is falling. We're not on a gold standard. We only have these fiat paper dollars. And so it doesn't make any sense to confiscate gold in order to devalue the currency, which is already devaluing on its own. If you try to devalue the currency right now, you're only going to make inflation worse. On the contrary, in order to deal with inflation, you need the currency to appreciate. And so, what do you do in order to get the currency to appreciate? You raise interest rates, for instance. This is exactly what the Fed has been doing. You cut government spending. Unfortunately, what the federal government is unable to do or unwilling to do, but that's what it was supposed to do in order to stop this inflation. So confiscating gold and devaluating the dollar, it's irrelevant nowadays because the situation is completely different. And so I think that gold and silver stackers are safe. They can sleep well at night. I don't think it's likely that the US government will try to confiscate their gold and silver again. It doesn't fit the situation. It doesn't fit the economic environment anymore.
Right. Absolutely. That was really well put. It won't solve the problem that they're facing this time around.
Thank you for listening to the Silver Hermit Podcast. If you like this content, please donate in the link which appears in the description below. Please subscribe to this channel and share it with your friends and family. Hit the bell icon to be notified whenever I release a new video. Remember, I'm not a licensed financial advisor. This video is intended for general informational purposes only and should not be regarded as investment advice. Before taking any investment decision, please consult with a professional financial advisor who may assess your personal investment objectives and needs.